Everyone wants to invest, but most beginners are scared right now. You open Instagram, someone is shouting, stock market crash is coming. Another reel says World War III is near. Some say AI bubble will burst. Others scream recession is confirmed. And one influencer says buy gold and another says sell gold immediately. And that is when I realized something is very important. The beginners are not scared, they are confused because of too much of noise on social media. And when confusion increases, action stops. That's why most people keep waiting, and waiting. So today I am going to share with you 5 pillars of investing that helped me to invest with confidence when I was a beginner like you guys. These 5 pillars work in every situation: bull market, bear market, recession, even in uncertain times like 2026. If you truly understand and follow these 5 pillars, you won't panic during market falls, you won't chase trends, and most importantly, you will stay invested when it matters the most, because the stock market doesn't reward people who try to predict. It rewards people who build right habits and stay invested for a longer time. So, if you are a beginner or someone who wants to invest calmly and confidently in 2026, then this video is completely for you. So, watch the video till the end. So, let's begin. The first pillar: patience and courage. Every generation believes that their time is the worst time to invest. And I know even you have felt that too. Let's look at history. 1992, Harshad Mehta scam. 2008, global financial crisis. 2020, COVID-19 pandemic. 2022, inflation, war, interest rate hikes. And now in 2026, uncertainty is everywhere. But here's the truth: nobody tells you about people who keep waiting for the right time are still waiting today. But the people who invested despite fear, despite noise, despite crashes, they are sitting on a life-changing wealth. Let me give you a very powerful example. If you had invested 1000 rupees per month as SIP since 1992 and the market gave an average returns of 13% per year, by 2025 your total investment will be 3,96,000 rupees, but your total value will be 65,59,748 rupees. Not because the market was perfect, but because you stayed patient. So, if you want to invest, remember this: courage gets you started, patience makes you wealthy. The second pillar: common sense. As a beginner, your biggest weapon is common sense. Don't try to become Wolf of Wall Street overnight. Don't chase penny stocks. Don't gamble in the name of investing. Instead, focus on strong and proven companies. These companies are called as blue chip companies or blue chip stocks. Reliance, HDFC Bank, Hindustan Unilever, TCS, Wipro. They have strong fundamentals, trusted brands, and long-term growth. This is not a financial advice or recommendation. And if you still don't know where to invest, just look around. Invest in companies whose products you use every single day. Fevicol is in almost every home. Manufacturer is Pidilite. Parachute hair oil is everywhere. Manufacturer is Marico. This is not a stock advice. This is common sense investing. Strong companies may fall temporarily, but they recover faster and protect your capital. Now you tell me in the comments, which products do you use daily and who makes it? Who are the manufacturers of those products? The third pillar: diversification. You have heard this line before: never put all your eggs in one basket. Diversification is your safety net. If one investment underperforms, your other investments support you. This is my personal allocation: 70% in stocks, 20% in gold and silver, 10% in bank for opportunities during crashes. This is my strategy. You should create your own strategy based on your income and comfort. But remember one golden rule: never put all your savings into one asset. As a beginner, your job is not to get rich fast. Your first job is to protect your capital. The fourth pillar, discipline and consistency. Most people don't lose money because of bad stocks. They lose money because of bad habits. Everyone is disciplined in the beginning. They invest for 2-3 months. Then the market falls. Fear enters the investor's mind and SIP gets stopped. One small decision, that too bad one, destroys years of compounding. Remember this, compounding only and only rewards discipline, not emotions. Market will rise, market will crash. That is guaranteed. But when you stay disciplined during bad times, you buy more units at a lower prices. And when the market recovers, that boring discipline turns into massive wealth. That's why SIP works best during crashes, not bull markets. Treat SIP like your mobile recharge or electricity bill. No excuses, no emotion. Discipline is boring. Consistency is also boring. But boring habits create extraordinary results. The fifth pillar, knowledge. The biggest difference between a gambler and an investor is knowledge. A gambler follows tips, reels, and WhatsApp forwards. But an investor understands what he is doing and why he is doing it. You don't need to read 100 books or you don't need to be a financial expert, but you must understand basics. What is SIP, mutual funds, what is stocks, equity, debt, gold, risk and return, why long-term investing works. Today, knowledge is free. YouTube, books, podcasts, annual reports, everything is available. But most people invest money without investing time in learning. So remember, before investing even 1 rupee, invest in time. Time is knowledge, because money can be earned again, but one financial decision costs your whole hard earned and your future as well. So now you know the 5 pillars of investing. Follow them sincerely, and one day you will look back and thank yourself. If this video helped you, do like, share and subscribe to my YouTube channel. I will see you in the next video with another powerful topic. Till then, invest wisely, stay patient, take care, goodbye.